Hello everyone. So in the series of class 12th accountancy Viva preparation, here we are with the fourth video. Again, we are going to conduct the Viva of one of the student, and I'm sure that this will be helpful for you in your preparation for the board practical examinations. So let us start. So Antariksh Chaudhary, here you are with us. Good afternoon.
Good afternoon, sir. Good afternoon, sir.
Let us start with the Viva part. Just give a short brief of the project that you have prepared, the short brief of the company as well as whatever work you have done in your project. Just give a short brief of that.
Sir, I have prepared my project on Tata Group, and for which I have taken three bases. For which I have taken three bases, that is revenue, profit, capital employed. For, to check whether which segment of the Tata Group is working much better, sir. And I have also taken common size statement as a tool for comparison and analysis.
What is the main objective of this comparison that you have undertaken? What is the main object of your project work?
So to determine which segment of Tata Group is performing best and which is not performing well.
What is your conclusion?
So I have concluded that TCS, that is Tata Consultancy Services, is uh, performing very best, and Tata Motors is not performing well.
Tata Motors is not performing that much well and TCS is performing better. Okay.
Yes, sir.
Just give me the meaning of ratio analysis or accounting ratios. What do you mean by accounting ratios or ratio analysis?
Accounting ratios refers to the ratios for ratio. Accounting ratio are the ratios to determine or to or to uh, sir, wait, sir. Yes, accounting ratios uh, are the ratios to determine the sir, wait, sir.
Yeah, take your time, no issues.
Sir, sir, accounting ratios are the ratios which are uh, which are taken to analyze the financial statement of the enterprise, and to check which segment or which department is working well or which is not working well.
Here I can see one pie diagram is there.
Yes, sir.
Calculation of percentage and degree contribution of profit for the year 2019. Okay. For the profit of various departments. You just told me Tata Motors is not performing well and TCS, Tata Consultancy Services, is performing better. Here we are having the comparison of profit. Okay. Now, in this pie diagram, I can see the portion of light blue color. The sky blue color is having the maximum, that is 253.94 degree. Okay, fine. Now I can see this 253 is for Tata Motors or not. Okay,
No,
no,
sir,
it
it
is
is
not
for.
for it. It is for TCS.
Yes, sir.
Okay, you must have taken some different colors so that it can be visible easily. Anyways,
Sir,
what is the difference between common size statement and comparative statement?
sir, in comparative statement, we include more than 1 year to compare the financial statement, and in common size statement we prepare we calculate different
Yes, continue your answer.
sir. In common size we take a percentage or and absolute change, and in common size statement we only take percentage.
There are two types of analysis. One is known as horizontal analysis, another one is known as vertical analysis. Common size statement is which kind of tool? Horizontal or
Vertical
vertical?
analysis.
G?
Vertical analysis.
Vertical analysis. And you have undergone with the various comparison, whether you have done a inter-firm comparison or intra-firm comparison.
Sir, I have done intra-firm comparison.
Intra-firm comparison. Okay.
Yes, sir.
And do you have any idea what is the difference between cross-sectional analysis and time series analysis?
Sir, cross-sectional analysis comes under vertical analysis, and time series analysis comes under horizontal analysis. In time series analysis, we compare on the basis of time or accounting periods more than one, and in cross-sectional analysis, we do not include time or accounting periods. We include different departments or different
Different
firms.
departments. Okay. Now just tell me, suppose if you are a bank manager and you need to grant loan to this company, that is Tata Motors. You are a bank manager, you need to grant a loan to this Tata Motors. What accounting ratios you will check of this company? Before granting the loan, what accounting ratios you will check? Yes, start your answer.
Sir, solvency ratios. In solvency ratios, we include interest coverage ratio, debt to equity ratio, total asset to debt ratio, and propriety ratio.
Okay. Suppose you need to grant loan, so not loan, if you need to grant goods on credit, if you want to uh, give a trade credit, if you want to allow a trade credit to your to the person or to this company, which ratio will you will assess?
Sir, that is a trade payable ratio and equity
Trade payable
ratio.
ratio.
Wait,
Just
sir, wait, sir.
try to recall the name. Trade payable, then
Trade pay,
turnover ratio.
turnover ratio.
Trade payables turnover ratio you
Turnover.
will check. So what is the significance of trade payables turnover ratio? How will it help you?
Sir, it will help us that to show that the company which we want to grant goods on creditors is able to our pay back us or not.
Any other ratio that you will calculate to check the credit worthiness of the company or short-term solvency position of the company?
Short-term solvency, sir, liquidity ratios,
Name them.
current ratio, and quick ratios.
Current ratios and quick ratios you will also calculate. Okay, now suppose if you are preparing the common size balance sheet, what will be the formula for calculation of various percentages for the common size balance sheet?
Sir, the mm, sir the segment profit or just segment and segment. Sir, if we
Listen
the
to my
company has
question once
segment.
again. Listen to my question once again. I'm saying,
Yes, sir.
asking, in case you are asked to prepare common size balance sheet, what formula will you use to calculate various percentages in the common size balance sheet?
So absolute amount upon total amount into 100.
And what will be taken as the total amount?
So in balance sheet, total amount is the mm, sir, the total of balance sheet.
Total of balance sheet will be taken as the base for the common size balance sheet. Okay, correct. Now tell me, will the total assets and total of balance sheet means the same, or is there any items which we exclude from the total assets while using it in the formula? Like we do have formula for the total assets to debt ratio. We do have other formulas where we take total assets. So does the total assets means the total of the asset side of the balance sheet, or we exclude some of the assets before taking the total assets?
Sir, we exclude some assets.
Which one? Name them.
Sir, spare and tools.
No.
Uh,
From the total assets, do we take all the assets or we exclude some assets? If yes, then what are those assets which are excluded from the total assets while calculating accounting ratios?
mm, current. Sir,
Okay, let me tell you
sir,
one.
I am.
Non-trade investment is the one that we deduct. What is the another asset that we deduct while calculating the total assets?
Sir, I am unable to record it, sir.
One is non-trade investment and another one is fictitious assets. We never include fictitious assets and non-trade investments in the total assets while calculating accounting ratios. Clear?
Okay, sir.
So
Yes, sir.
whatever that was all for your Viva part. I'm sure that some of the questions you will prepare more in the future for your
Yes.
next Viva. You will prepare yourself in a better manner. Any questions you would like to ask from your side?
Sir, you had asked me that which ratio is used by the manager of the bank to know that whether he has to give he will
Whether he
give the
want to grant
goods
loan
or
or
service.
not. So obviously,
No, sir,
to
not
before
loan.
granting loan, we need to calculate. We need to assess two things of a company. First thing, it's profitability, whether he will be able to pay us the interest on time or not, and that can be judged through interest coverage ratio. Interest coverage ratio helps us to assess whether the interest will be paid to our bank on time or not. And secondly, it's long term solvency position, just to assess whether it will be able to pay our principal amount, repay our principal amount back or not, and that can be assessed through the debt equity ratio. Debt equity ratio, the ideal debt equity ratio, as you have studied, 2 is to 1 is there. That will
Yes,
really
sir.
help us to know the long-term solvency position of the business, and interest coverage ratio helps us to know whether the interest will be paid on time to our company or to our bank or not.
Yes, sir. And for goods, if someone want to credit goods,
First of all, trade payable turnover ratio, and secondly, the short-term solvency position, that is current ratio and quick ratio, are also to be assessed.
okay,
Without
sir.
knowing the short-term solvency position, without having a good liquidity position, how can you be sure that you will be paid your debts on time? So liquidity short-term solvency ratios जो हैं आपके, that is liquidity ratios, that helps you to assess the short-term solvency position of the business or the liquidity position of the business. Current ratio, quick ratio, and trade payables turnover ratio.
Yes, sir.
So next Viva will conduct for the chapter of cash flow statement. Till then, you can just prepare yourself in a better manner.
Yes, sir.
I'm sure that in the next Viva, you will present much more better. Okay.
Yes,
So
sir.
all the very best. Keep preparing, keep studying. Thank you.